Hi, folks. My name is Mike Bunker, and I'll be walking you through the information for tonight's call. If you guys can hear me okay, if somebody would just type me a quick little message over in your little GoToMeeting section there, just let me know you can hear me just fine, and we'll get started. All right, perfect. Thank you, guys. Sure appreciate it. Jason Brown normally does tonight's call, and he had some family things that he needed to be a part of, and he asked if I would take over for tonight, and I'm happy to do that. So as a little bit of introduction here, just to give you a little background for those of you that are new, we're going to be doing a couple of different things. First of all, we're going to talk about our history of the company, the product that we offer to our clients, and for those who want to listen and listen to a little bit more, we pay referral fees to our clients. And it's a hugely important part of our business because that's what caused us to just take off as a company. Our clients are happy. They love to talk about the program anyway. People that hear about it love to get it. Everybody benefits, and we'll talk about that quite a bit at the end. Now, Worth Unlimited, and we'll just dive right in. And Jason's presentation is a little different than what I typically do, but we're going to dive in, and of course, at the very end, if we have some time, we'll go through questions, but this should be pretty comprehensive. Now, if anybody on the call has used a GPS, I should probably say if anybody hasn't used one, everybody has one now on their cell phones, it seems like, on their smartphones or in their car. Now, when you have a GPS system, I want you to think about this scenario. Let's say you were on a business trip out of town, and it was so important that you get there on time and that everything works out, and you have your GPS system, you're in traffic, you're in Los Angeles, you're freaking out, and the GPS system is telling you where to go, and then you've got to take a certain freeway. But let's say you take a phone call and you're talking to your spouse or business partner, and all of a sudden you look up and you're driving underneath that freeway overpass. You missed the exit. Now, we all know that feeling of panic, right? You're just sweating, you're freaking out. Well, what would the GPS system tell you, right? I mean, if it was your mom, it would say, if your mom was the computer voice, right, and it would say, listen, genius, I told you the fastest way to your destination. You didn't listen to me for whatever reason. So now I've got to tell you the second fastest way, right? Well, in reality, the GPS system says what? It says recalculating, rerouting, whatever it is. But that's what it does, is it says, look, I'm now going to tell you the second fastest way. Now, that might cost you 2.3 miles to backtrack, and that might cost you 9 minutes because of traffic or whatever it is. But it tells you exactly where you stand at any given moment, all right? And in our program, it's looking at everything. It's looking at not just it's not just looking at time like that, like in a car, but it's saying, look, that financial decision you just made right here has some far-reaching effects over time. There's so much interest at stake on your debt, especially when there's a mortgage involved, that by you not doing things exactly mathematically correctly, you're going to end up paying this much more money to the bank in interest. And you never would have imagined that much money was going out the door with those little decisions, okay? And it says, here's how much time that costs you. Believe me, if you had a program that was like a GPS system attached to your whole financial world, you're going to end up keeping a lot of money in your pocket. Now, we talked about a mortgage, and we'll get into that into detail as well. But what if this was your debt load? This is a very typical American family, wouldn't you say? There's a mortgage here. There's some furniture, a trailer loan. I mean, this could be a student loan, a car, ATV. Usually there's multiple credit cards. Some families just have a mortgage. Some families, the max I've ever done was 29 creditors for one family, okay? But even with just a mortgage, there's so much interest at stake. But here's the question. If you were sending extra money to pay down your debts on your own, that's a good thing, right? Of course it is. But what do you pay down first? Do you pay down the highest interest rate? Do you pay down the lowest balance first? That's what Dave Ramsey says to do, right? Do you pay down the car because, let's say this car only had $4,000 left. and it's a big payment, like a $610 BMW payment. Maybe it makes sense to pay that off because it's such a big payment that then would be freed up to go after the debt. Or do you pay the mortgage down because you're paying such a ridiculously high amount of your payment right now is going to interest? There's so many different options. And what people forget to look at is it's not just interest rate and payment, is it? That's all we tend to look at. Interest rate and payment, interest rate and payment. The term matters too. The amortization schedules matter, right? Credit cards are a totally different creature than a mortgage, than a car, all right? So our program looked at all of those things, amounts, interest rates, amortization, calculation of payment, adjusting rates, but it also looks at your spending, and it looks at your income. It looks at changes in your behavior. It looks at the plane tickets you're going to buy 2 months from now to visit your mom. It looks at your yearly amount that you spend on Christmas or whatever holiday you celebrate. Right? You see where I'm going with this? It gets so detailed, and if its goal is to keep money in your pocket over time, believe me, you're going to keep a lot in there. So let's give a little history. We used to be a mortgage company, all right, in Utah, and I'm very close to this situation. My ex-wife was a loan officer for these guys when they just did mortgages, all right, and I remember one of the owners came up to me at a barbecue of all things and just said, "Mike, oh my gosh, you got to see what we're working on. This is going to change everything." And I'm thinking to myself, you're a mortgage company. What are you going to do that's going to change everything? I don't get it, but whatever, right? And I went to the first meeting with 6 people in it. And my ex-wife and I became some of the first agents in the entire country to go into people's homes and start sharing this message with people. So I'm close to this. Now, here's what happened is our owners realized, if you look down here at this lady in the house where it says ATM, people back then were using their mortgage as an ATM. And what do I mean by that? They refinance, and they'd pull money out and pay off some credit card debt. Now, that sounds great, but then what do people do? They go get more credit card debt, don't they? And all of a sudden they refinance again in 5 years to put another Band-Aid on the problem. Or people were pulling money out of their mortgages to invest elsewhere because they're like, man, I'm only paying 6%, but I can earn 18% over here. Look, people were doing all sorts of crazy things, and banks were happy to lend that money out because the economy was doing so well. Now, we did a 400-family beta test in Denver, Colorado, all right? And what ended up happening, this was with an early version of our program, but we just had such a great reaction from our clients, and they started just sending us people. Think about that. I mean, when somebody goes and gets a mortgage with a mortgage company, yeah, they might like their loan officer, and maybe they have a decent experience, but they're not running around and telling everybody about it. That's exactly what was happening. We were getting so many referrals that, guys, it ended up being crazy. Up here where it says one of Utah's fastest growing companies, I'm talking we went from being a little mortgage company to doing $300 million in sales in a 3-year span. And that's because of those referrals that came in. It took off. Now, we ended up winning Ernst & Young's Entrepreneur of the Year Award in 2008. 3 years later, I was at that event. It was pretty exciting. They basically said this little mortgage company changed their focus from just refinancing people and starting people over and over. And in a way, look, sometimes a refinance is a beautiful thing. Sometimes it's the right thing to do. In conjunction with our program, it can be a beautiful thing. Okay, so don't get me wrong. I'm not saying that a refinance is inherently bad. It's not. It's just when it's used over and over and over again as a Band-Aid, that becomes a problem. Okay? Now, this is what I want to talk about. I've shown this to financial planners, CPAs. We have lots of different types of clients, and most of them kind of chuckle when they see this because they go, golly, we don't even look at debt this way. That's not normally how I picture things, right? So a 6% interest rate. Now, look, some of you have 3.25 or 3.6 or 4.8. I just put 6 in here. We've had this for years. It's just to show the concept, all right? A $200,000 mortgage at 6%. The payment, the principal and interest payment is $11.9910, all right? Look how it breaks down, guys. Because 6% doesn't seem like that bad. It's not something somebody's in a big hurry to pay down, plus it's a 30-year behemoth, right? But look at the payment. $1,000 of the $11.99 is going to interest, guys. If you want to figure it out, grab a calculator if you have one. Here's what you do. You take the interest amount, type in $1,000, and divide it by $11.99. 83.4% interest is what this family is paying on this payment Just stop and think about that. If your credit cards went from 15% to 30, you'd have a heart attack. If it went from 30 to 50, you'd be in a rage, right? If it went to 83.4, you'd pass out. And I'm talking on a credit card where you might have a $200 payment. This is your biggest payment you make by far, and this family's paying 83%. And next month, only one more dollar goes to principal and one less dollar goes to interest, guys. After a year, look at this. $14,000 is what they've paid, but only $2,400 of that goes to equity. So after 5 years, let's say somebody refinances and they're going to save $100 on their payment. What's $100 savings times 12 months? That's $1,200, right? What's $1,200 times 5 years? $6,000 in savings. Why do I say 5 years? Because, guys, that's the national average of when people are either going to move or refinance every 5 years. So that's where they stand to save maybe $6,000 before they probably hit the refi button again, or they move. All right? Well, let's look at what happens to this family that refis just to save $100 on their payment and maybe save $6,000 over the next 5 years. Look at this. They had paid $72,000 already in 5 years, and only $14,000 went to equity. So they just took $58,000 of interest that they had already paid, and they basically put that on a big silver platter and handed it to the bank and said, "Hey, bank, will you do me a favor? Will you just keep this $58,000 forever, because I just made the executive decision to go back to 30 years and start over and do it again." Okay? So I say that so you'll look at debt and mortgages a little differently than maybe you do now. Now let's fast forward here to 30 years. Okay? They don't even pay their mortgage halfway down until they're at year 21. All right? You guys want to be freaked out. Look at year 10. If you take 838 and divide that by 1199, you're still paying a ridiculously high amount of your payment to interest, even 10 years in. And really, how many people do you guys know that haven't moved or refinanced after 10 years? In the past 10 years, almost everybody has. All right? Now, after 30 years, look what this family's going to pay. $231,000 of interest above and beyond the $200,000 that they borrowed. Guys, this is what I'm talking about. If for the price of a really cheap car that you would buy your 16-year-old or a couple of couches or whatever it is, you could invest in a program that's going to help you decrease the amount of interest you pay by maybe $20,000, $30,000, $40,000, $50,000, maybe even $100,000, is that worth it? It better be, or I can't help you, right? It's an investment to reduce the amount of interest you end up paying. Not interest rate and payment. Look, we're talking about volume of interest, all right? Now, let's take, see where it says sending extra principal. Look, we can all send down extra money to our debt. You know that. I know that. It's the only way to pay it off faster, send some extra money, but we don't do it aggressively. And if we do it aggressively, we don't necessarily do it mathematically the best way. And we never send all of our extra money. We just send a portion of it. What our program is going to show you is a way to have all your extra money going toward your debt 24/7 when you're not using it. It's pretty exciting. All right, so let's take $5,000 additional payment. Let's say you got a $5,000 tax return, okay? Now, a $5,000 tax return, what if you put that in a savings account? If you put it in a savings account, how much are you going to earn in 10 years? A couple dollars? Because you're making 0.1% interest. If you put it in a checking account, you're going to earn 0 interest, and guess what? You're probably going to spend that $5,000 really quickly. Now, what if you sent that to a mortgage, the $200,000 mortgage at 6% payable to principal? Now, most people wouldn't do that because they're like, it's a 30-year mortgage, who cares, right? But let me show you what it would do. $200,000 would drop to $195 clearly, okay? That's not rocket science, but the interest rate stays the same. The payment stays the same. You could send $100,000 to your mortgage today, and next month it would be the same payment it was last month. That's how it's set up. But here's what happens. If you sent $5,000 toward the principal, you would skip. There's a column in an amortization schedule called cumulative principal, and you would skip all the way down to where it says $5,000. And guess what? You will realize that you just skipped 23 payments. You just skipped the worst 23 payments on your mortgage. Now, how much interest was at stake with that? Look at this. Oops. That $5,000 of principal canceled out $23,000 of interest. I want to stop and just think about that, guys. $23,000. But then people are like, well, that's over 30 years. Guys, well, what if this family pays off a debt in 12 years? What if the whole mortgage is gone in 12 years? It's not some 30 years. It's like, no, you just saved all that money. It's fantastic. All right, so let's move forward. Now, we're going to talk about line of credit. You don't have to have a line of credit to use our program anymore. You did at first, because when we first set this whole system up, everybody could get a line of credit just about. All right? But now we've revamped the whole system to where it either can work off of these kinds of lines of credit or it can work off of checking and saving. Now, the key with checking and saving is building up a savings account first, right? If you don't have one already, there's not a chance in the world your brain is going to allow you to be really super hyper aggressive with your debt pay down. No way, because you're too close to the edge. So first things first, you can tell the program, I would sure feel more comfortable with $2,000 or $3,000 in my savings account. The program will build that first. Once you hit that reserve account, you do the same thing in checking. You always want $500 in there, no matter what. Once you've hit those reserve amounts, why would anybody want any extra money sitting around earning 0 pennies in a checking account when it could be slamming down the debt that we've been talking about at a way higher rate? Okay, it's a whole mindset change, guys. So here we go. This is where it gets kind of interesting. I want you guys, please be open-minded. Please just just look at things a little differently. All right? What if you had a $200,000 mortgage at 6% and you had a $10,000 line of credit, even at 10%? All right? What would happen if our program said, hey, I want you to make a funds transfer? Now, that means borrowing money from your line of credit to pay down the first mortgage. All right? What if it told you to move $5,000 from your line of credit to your mortgage? At first glance, that sounds really stupid. You're like, how can I pay down a 6% deal with a 10% deal? That doesn't make any sense at all. Well, didn't we already discuss that this family was paying around 80% of their payment to interest? And you just moved a chunk of debt that you were paying 80% of it to interest, and you just moved it over here to a line of credit where you're paying 10%. All right? Now, this needs to get paid down, and I'll show you how we do that seamlessly without you even thinking about it. Okay? But you just did a smart thing. Okay? Now, that $5,000 amount is totally arbitrary. It's different for every family. I arbitrarily chose $5,000. Look, I've had clients where their first funds transfer was $411.06, and I've had clients where their first funds transfer was $37,000. It's totally dependent upon your debt load, your income, your discretionary, the whole bit. Okay? Now, again, that thing just canceled $23,000 of interest in 23 payments, and now we have to worry about paying this down now, right? So I'm going to show you how we do this. What if you paid, so you're paying some debt from the line of credit, and then when you get paid, guess what you do? You drop your income right into the line of credit. Wow. But then you're like, what happened to my money? What if I need my money? You have access to your money because it's in a line of credit. It's totally accessible. It's liquid to you, just like a checking account is. And you sit there and you're like, oh my gosh, I never even thought about using that banking tool that way. All right, so that's what we're going to show you. Why not use a banking tool? Because think about it. Why do we all use checking accounts? We certainly don't make any interest. But we have to do business with the banks, and they take our money and they lend it out at a high rate, and they reward us with 0% interest. Why not use a different banking tool that will allow our money to be canceling out interest 24/7 instead of earning us nothing? Okay? So now let's take a sample family, you guys. And this sample family had about $5,000 of monthly income, $4,000 of living expenses. I'm talking mortgage payment, car payments, insurance, credit card debt. They're spending money, gas money, kid money, date money, everything, leaving about $1,000 of discretionary. Now, a lot of my clients only have $100 discretionary. That's fine. This is just showing you with this situation what it would do for this family. Okay. Now, the other thing is this. If we lined up 10 of your neighbors right now and said, how many of you, let's say they all had $1,000 discretionary left each month. And I said, by raise a hand, how many of you send all $1,000 to your mortgage and to your creditors? How many people would raise their hands? Not one. Not one. Most of them make minimum payments and then they send some extra to their credit cards. Okay? Nobody's sending all $1,000 because that's silly. They need access to some of their money, so they might even get really aggressive and pay $300 or $400 or $500, but there's still $500 sitting around earning them 0 pennies. And here's what we're going to do instead. Guys, our program used to be $3,500 for what we do. Now remember, we were a mortgage company that charged that and then some, sometimes a lot more in closing costs just to put people in a debt. We still have our company. We still have our overhead. We still have all of those things. Now, it's not always $3,500. It's different for every family. We have a matrix to run. When we run your free analysis for you to say, here's what the program would do for you with your specific debts and your situation, it also spits out a cost and says, here's what the investment would be. Here's what the return on investment would be. Here's how much interest you're going to save. Here's how much time you would save. And by the way, by paying off the debt early, here's how much money we could put away toward retirement. Okay. Now let's come in here. Pretend this is a line of credit, guys, and I'll try to speed this up a little bit, but pretend you had a line of credit and it was empty. Let's say you paid for the program with the line of credit. You now have a balance of $3,500, correct? Well, you would pay your bills out of your, get a line of credit with the same bank that you have your checking account with, and all you have to do is click a button to move the money. You pay your bills from the line of credit. You now owe $7,500, right? Now, if this was a 10% interest rate on the line of credit, what's 10% of $7,500? $750. You divide that by 12 to get a monthly payment, you'll get about a $70 finance charge, roughly. And you're thinking, why would I do this? It's a $70 charge when I have a $0 charge if I'm using my checking account. And I say patience, my young Padawan, right? Just be patient with it, and we'll get there. You don't pay a finance charge of $70 because guess what? When you get paid, you drop your income into your line of credit. Now, a line of credit is looked at differently by the bank. They look at the average daily balance that you owe, and then they apply the interest rate at the end. So if you cycle a lot of money through the line, if you sent 10 payments to your line of credit that month, your balance will be much lower, and you have a smaller charge. So if you drop your income into the line of credit, it's still accessible to you because it's liquid. But that $5,000 immediately reduces the balance from $7,500 down to $2,500. And you pay a finance charge, but it's going to be of around maybe $20. Now, did your life change? No. Did you pay all your normal bills? Yes. Did you make your normal income? Yes. But look what you did. Your debt went from $3,500 down to $2,500 without even thinking about it. All $1,000 of your discretionary worked for you instead of doing nothing in a checking account. That's pretty interesting. We do it again the next month. See that? You pay your bills. Do you pay interest on it? No, you drop in your income. Oh, and then we pay a finance charge of $12. Again, you live your normal life. Month number 3, you pay your bills. You drop your income. Do you see a pattern? It's not hard. You pay your bills out of it, you drop your income into it, and all of your extra money is canceling out interest on your line of credit. And then what do? In 3 months' time, you've paid the balance down to $500. Okay? This is where it gets fun. The program will look at your debts, and in this case, it's just a mortgage, and it says, I need you to borrow exactly $36.75.77 and send it to your mortgage payable to the principal. Okay? What does that do? Well, you now have a balance of $41.75 and you have a finance charge. But what did we just do in 3 months? In 3 months, you paid $68 of finance charges, and you're thinking, yeah, but I would have had 0 charges in my checking account doing what I normally do. But you know what? Guess what? You would have earned exactly 0 pennies of interest putting your money in checking, and look what you did here. You canceled $17,000 of interest off of your mortgage with that one funds transfer, and it doesn't even feel like you sent money away because you have access to your money in your line of credit. If you go over your budget, you just live your normal lifestyle. But why wouldn't you want to, instead of earning 0 pennies, cancel out 17 grand of interest? Guys, the negative interest on your debt is just as important as the principal that you owe. It's still money. All right? Now, the other thing, you just took 18 months off of your mortgage. Now, I've got to speed this up, but basically what this shows you, if you look here, is that the amount going to principal is just creeping up month by month, and after 3 short months, because you made that funds transfer, you have $19 more on every subsequent payment going toward principal. So now let's fast forward. Guys, I'm going to speed this up. You pay your bills, you drop in your income. You pay your bills, you drop in your income. You pay your bills, you drop in your income. And the program does the math, and it triggers at a totally different dollar amount. Last time it triggered when you got it down to $500. This time it triggers at $1,100, and it says send $29.20 and 23 cents to your mortgage. You pay a finance charge, and you just cancel another $12,000. Holy smokes. Wow. Different lens to look at things through, right? 16 more months are gone. So look at this. Look at the amount going to principal. It just jumped by another $15 every month. Now, I'm going to fast forward to month 12, guys, just because this gets repetitive here, okay? But look at this. After 1 year, they've done 4 funds transfers, and look what they've done. They've canceled $51,000 of interest in 53 months, in 12 months. That's phenomenal. All right? And at the end of a whole year, instead of the principal just creeping up by $12 in 12 months, you have $76 more per month going towards the principal on all the subsequent payments. So it's just always compounding and paying it down faster, faster, faster. Now let's look at a family that used our program versus a family that didn't. Now, this family in 1 year paid their debt down to $184,000. Family B, making minimum payments, they're still at $197. It would have taken them 5.5 years to get there. All right? It would have taken them 30 years, and they would have paid, as we showed before, $231,000 of interest. Our family, 10.4 years, and they pay 70. Don't cry for the banks. The bank still made $70,000 off you, but you know what? You kept $161,000 in your pocket. Do you think this client is ever going to say, man, I can't believe I paid $3,500 to invest in this whole system? No way. They laughed and they said they'd pay it again. It's so worth it. All right? It's such a great investment because your debt is a sure thing, isn't it? There's no risk. You're paying down debt. All right, now here we go. This is what the program looks like. And now, just so you know, I am one of the individuals that runs the analyses for our potential clients and walks them through how it all works and goes through a demo very in detail, okay? So if we ever have that opportunity, if you ever want to run your numbers and you can either have the person referred to, they can run your numbers and get into that. If you feel more comfortable having somebody else do it, I'm happy to do that, and your agent can set you up with me or somebody on my team. But guys, we'll go through this much more in detail at that point. I just want you to see briefly, look, up at the top of the page, instead of 30 years, this family is looking at 9.2. This is just a sample that we pulled up. Instead of paying $150,000 or $200,000 of interest on their debt, if they follow the program, they're going to pay $69,000 instead, right? Now, you can look at a lot of different things. You can either see how much interest you've saved to date. You can see what your discretionary is from month to month to month. You can see how much principal is left to pay. These are your little cheerleaders. That's the light at the end of the tunnel. Now down here, what you're looking at is, look, there's a budget tab that we could click on, and I can't hear it. This is just a slide. But your budget, all your bills, everything you have, your income, the timing, the amounts, the dates, that's where you change it all in here. Accounts. When we run your analysis, all that stuff's going to be in there. You just put in the dates that you make your payment. You can run reports and see where all your money is going. This can show you how much money you can earn once the debt's gone, and now you have all this freed up money to go into savings or go in toward a retirement. It's phenomenal, but the action plan is the key. That's all right here. And this tells you exactly what to do and when. This family is trying to build their savings up first, so it says, hey, I'm looking at your income and your debts, and I'm looking at your bills, and I'm looking at everything that's happening. And the right play is to send $896.59 to your savings account on the 15th of the month. Do it. Do it. and you do what it tells you to do. All you do is update this every couple of weeks, and the numbers will change. The game plan will change. Your numbers, all this stuff is fluid. And here's the key. By seeing this, you hold yourself accountable. Once this family sees 9.2, do you think they ever want to see 9.5? No way. So when they get a little lazy with their spending and they're not good and these numbers start to creep up, they're like, okay, let's get that back down. In fact, they want to start paying this down. And what are they going to do? Well, they can work on their budget and say, what if we spent this much less per day? Well, it immediately would show you it might save you a year and a half if you just change your budget a little tiny bit. And it might save you $17,000 of interest. Do you think that's motivating? Absolutely it is. It's huge. And not only that, but every little decision you make, if you're saving money with your budget, you can go into the reports and it will show you just how much more money each of those decisions will have put in your retirement. Again, all these numbers are dwarfing what you're paying to get the program. All right, now I'm just going to fast forward through this. Now, as a summary of everything that I've said, look, this program does so many things. It basically shows you the true cost of every little thing you're doing, the opportunity cost. The program says, oh, you want to buy that $27,000 car instead of the $20,000 car you can afford? Well, the true cost is $120,000 because I would have canceled out $93,000 of interest with that. And you sit there and go, wait, what? Huh? It's that kind of thing where it shows you. It says, look, every action has a reaction, and I'm going to show you what that reaction is and what that price tag is in interest, that invisible interest that you've never thought about. I'm going to put right in front of your face. Guys, this changes lives. All right? Now, the customer support is not in India or the Philippines or San Salvador. It's in Utah, okay? And when you call, you get a live body. They're very helpful. They're very knowledgeable. They're very courteous. They're very kind. I used to run that whole division for years and years, okay? Now, here we go. Now, by the way, this is the number you'll call to schedule your own appointment to run your numbers, okay? Or you can talk to the person that invited you onto this call, and they can get that all squared away. If you want me to handle that personally, ask to be put on Mike Bunker's calendar. That's B-U-N-K-E-R. I'm happy to help. If your agent is qualified and ready, and you don't mind them doing that, and they're ready to help you with that, that's fine too, all right? But let's move forward here. Because now this is what we're talking about. Remember all those referrals we talked about that enabled us to turn into a $300 million company in a 3-year span? That's what we're going to talk about. You do not want to miss out on that opportunity. You don't have to. You don't have to do anything. You don't have to refer a single soul if you don't want to. You can just get the program and enjoy the benefits and be absolutely happy with that. But here's the thing about that. You will talk about it. Anyway, it's going to come up. If you just sat down with your wife or your husband and you looked at all this information and you ended up putting it on a credit card and you bought it for $33.95 or whatever it is, and you're going to save $78,000 of interest and be out of debt in 10 years and put another $200,000 into retirement because you got your debt paid off early, don't you think you're going to sit down at lunch with your buddy tomorrow and say, oh my gosh, you got to talk to this person that hooked me up. Look what we're doing. Then you can say, I don't sell it, but you sure need it. And if they're interested, you let us run with it, okay? So here we go. Now, by the way, I'm going to throw a little disclaimer out there. I'm not on the agent side of things. Jason Brown runs that whole division, and he knows that cold. I handle helping families move forward with this, okay, and explaining the information and overcoming objections. So I know enough to get through all of this. If you need more detailed information, the person that brought you on can lead you to that afterwards. But I want you to see the overall gist of the opportunity that is there for you, okay? So we talked about the product already. The target market. Do you know anybody that has debt? Yeah, just about everybody. That's your target market. If you're a realtor, what's your target market? Somebody that's looking to sell their home or buy their home, and that's a small percentage of the population at any given time, right? Same thing for just about anything else, but for us, it's anybody and everybody. Do they have to have a mortgage? No. Can they be college, students that have some credit cards and some student loans? Absolutely. It's for everybody, okay? Now, the distribution, we're going to talk about that in detail now. The income stream, guys, Like I said, you might just refer a handful of people and one of them finally says yes 3 months from now and you make $300, $400, $500. Great. That's not a bad thing. That's awesome. Or you could turn this into a very, very lucrative side business. My ex-wife was the highest paid female in this company for years. All right, and she started with just a few families and eventually had whole mortgage companies and insurance companies offering this to their entire clientele base. And then they would go to other insurance companies or other buddies they knew that owned companies and have them, give this to their clients. And it was just a huge financial opportunity. All right, so here we go. Guys, no selling. Sometimes it's really awkward to sell to your friends and your neighbors. I'm one of the top people at our company, and sometimes my friends don't want to hear about it from me, right? Because it's just how it goes. They're like, you're the goofy guy we hang out with on the weekend. Maybe I don't want to come to you with my finances. That happens sometimes. So you can refer it to somebody else. You can refer it to the home office, all right? Would you like to be debt-free? What would you do if your mortgage was paid off tomorrow? Like, what would that do for you? Get people talking about that, thinking about that. And you're like, look, let's check and see. Here's what it's doing for me. Give them your story. Buy the program for yourself. Have it, own it, live it, love it, use it. And then you're going to happily tell that story. That will get people interested, okay? We run the numbers, and we try to close that deal if we can. All right, just 1 second. All right. Hold on just one moment here. I have to tell you this. You guys, my phone just buzzed, and one of our agents, in fact, one of our top agents in the company had referred one of her clients over to me, and she just said, I got a text from the person that you talked to earlier today, and it said that they're probably going to move forward with this. And that's just exciting. And when I first talked to them, they had their own ideas, and they said, I think we're going to do it this way and this way. Maybe a few years down the road, we'll look at your program. And it's just nice to see that process worked. Okay, so here we go. Let's get back to this. You get paid a referral fee even if you just refer. Okay, if you don't do the whole sales presentation. In the old days, you had to do all of that. Okay, and that gets a little awkward sometimes with friends and neighbors. Okay, you can let us do that. Now let's talk about how you get paid. All right. Now, first of all, let me explain. When a deal goes through and somebody purchases the program, we have a really great split. Do you think it would be awesome if we split it 50-50 where our company kept 50 and we let the sales team keep 50? That would be great. We do it 70-30. Actually, we do it 30-70. That's what I should say. We take 30% of the revenue that comes in, and we use that to run our whole company and pay for our executives and our sales team, our internal sales team, and we have our customer service team and our marketing team and our IT department. Look, we pay for everything with 30%. The 70% goes to the field in a variety of ways, and I'll go through that to my best of ability right now, okay? Now, if you're a brand new agent and you refer somebody to us, now, do you see at the bottom it says average sale is $3,100, commissionable volume is 70. So, look, some deals are $3,495. Some deals are maybe $2,100. But most of the deals, I'm going to be very candid with you. If you have a mortgage and a regular kind of debt situation, it's probably between $3,000 and $3,500 is what you're looking at. Okay? There's variations on that theme. If you have more than 3 mortgages, then it's $3,795. Just to let you know. But then again, if you have more than 3 mortgages, the amount of interest you're going to save on this is through the roof. Okay? So let's say you refer a deal in, and we close that deal, and we help that family get started, and they're excited. The check you receive in the mail or in your bank, if you do the automatic deposit, would be $496. So out of that 70% of $3,100, you would get 23% of that. $496 is not chump change. That's a great day when you get that check in the mail. You're like, wow, I spent 20 minutes with my friend telling her how much I love this program, and that's kind of all I did other than set the appointment up. All right? Now, if you become a supervisor, which means you do $4,000, that might be 2 sales, right? And one of those is your own sale, because you can start building agents underneath you, and they can do some, and that counts toward it. But bottom line is, you hit supervisor, it bumps you up 5%, and you make $605. If you become a director, that's $12,000 in total sales. All right? That's 33%, $714. Now, guys, we're going to talk about this later, but this one right here is something you can hit immediately. Instead of you, yeah, I'll get to it in a minute. All right, sorry to jump the gun. You get to the next one, you do $28,000 in total volume, you become a managing director. You're getting $822 on that. And the executive director is the big thing to shoot for. Now, you can go higher. There's other things to hit. But, guys, this is a really great level to hit, okay? Because once you hit here, you're getting a phenomenal commission on each deal that comes in, all right? And you're making great overrides on the people underneath you. And we'll get into that here in a minute. Every agent that signs up with us, we build them their own replicated website. It's specific to you, has your number, all your information. Your clients can go here, and instead of you fumbling through the explanation, you can say, look, let me tell you why this is important to me and what it's doing for me. And instead of me babbling, let me have you watch this. You can pull up your laptop and click play, and it will explain the sales opportunity for them. You know, and some people don't want to. They're just interested in buying the program. They have no interest in selling it or referring it. That's fine. You can take them to a site that only talks about the program. Okay? So we do that. We build all this for you. That's phenomenal. All right? Now, different ways to earn compensation, of course, your own referrals. Closer commissions, we've just opened that up. And I want to be, look, there's some agents out there that are fantastic, and they're professional. And they're really good at this, and they know how to run the numbers, and they know how to answer your questions and present all the information, and they can go ahead and close that. Or if you're an agent, you can do that, and you make a little bit extra money per sale. Just be very careful with this, because a lot of people just don't want their friends and neighbors to know their financial situation, all right? That's just the reality of things. I just closed a deal for a guy about a month and a half ago, and he's out in Hawaii, and he told me, Mike, I found out about this 6 years ago. You know why I didn't buy it? It was my mother-in-law that was trying to find out my financial information, and I said, no way, no how. I know I need that program, but I'm not getting it because I'm not telling you. He goes, I'm so glad you have this system now where I can just refer my people to you and your team, so just know that that's important. Now, recruiter bonuses. So if you recruit people to become agents, that plays into it, okay? If you have a team that you build and they are making sales, you're going to make overrides on their sales, just like any sales manager anywhere in the country, okay? Executive management overrides. Let's say you're a regional sales rep. You're making overrides on that for all the different teams within your region, okay? We have a Worth Rewards program. I'll go over that at the very end. Private label. Now, I'm not involved on this side of things, but this is actually kind of cool. Let's say some of you listening are you know, you might be in a mortgage company or you own a mortgage company or whatever it is. If you start selling our program, you might not like the idea of referring somebody to an entirely different entity. You'd like to make it really look like it's all you, and your mortgage company is offering this system that's so life-changing. Well, guess what? That mortgage company can pay a really nice, you know, there's an investment. I don't have all the numbers, right? But it's thousands and thousands of dollars. You know, it might be 10 grand. I don't know the numbers exactly, but they pay an investment to have this whole thing streamlined, and it's labeled as if it's coming from their company. They still get the same customer support from our internal team. Now, everything stays the same, but it's a branding play. Okay, if you end up being the person that helps, you know, get all that done, there's some really nice commissions in that. All right, so and then there's overrides. So what was that last one? Oh, yeah, trips, incentives, promotions. That's part of Worth Rewards, and that's just stuff that's just going to happen more and more. You get involved with this, and you start making this part of what you do, and you open your mouth, and you're excited, and you're a happy client. The money will come, and people will be happy. All right. So now this is, remember how we showed you what you would make on a sale? Now here's what happens if you end up making a closing commission, all right? So that's what those numbers come to. If you get to that point to where you can close a deal, that's fantastic. That's fine. But sometimes it doesn't happen right away. Sometimes it takes 2 calls or 3 calls. Sometimes it's awkward. Sometimes you got to overcome, you know, their questions or their concerns, and you better be ready. You better know your stuff. If you really want to go that route, what you can do is ask myself or somebody on my team and say, look, I've talked to the client. They're fine with me listening in, and be a part of that so you can hear it and listen and learn and until you're comfortable with that process, okay? Bottom line is, for every client, they need that individual attention. They want their questions answered. They want to really understand this and be excited about it. Now, this is exciting, guys. This is something that we call spread, all right? Now, we didn't have this until our convention that just happened at the end of October. This is huge because if you start building a big team, that's a lot of effort you're putting into there, all right? And it's not that you make a bunch of money or any money when you just like sign up an agent. It's when they start producing, you can make some overrides. So let's talk about spread, all right? So let's say you are an agent and you make some sales and you become a supervisor and you bring on, let's say one of your clients is like, man, I want to refer this. I love this. Okay, your client is an agent, right? Your brand new client became an agent. Well, let's say they send somebody in to me and I close a deal for them, okay? They make $496, but guess what? Because you are at a supervisor level and you would have made $605, you make the difference. You didn't do a thing. They did everything, I did everything, and you made it $109. Now, what would happen if you had been a director when that sale went through? You made $217. If you're a managing director, you made $326, and if you're executive director, you made $435. That's awesome. Now, what if you're an executive director with 90 people on your team? 200, 1,000, 4,000. And all of that work is going on around the country, and those deals are happening, and you're not involved, and you're just making money. It is phenomenal. That's how we get this message out here, because once you realize this can change your life financially and your family's life, you want to get this message to everybody. It's product-driven. It's just a phenomenal product, but the company is not being stingy with that, because we realize if we pay out at such a high level, it's going to get everybody telling everybody about it, so we can make this happen. All right. Now, this is just a little chart that just kind of shows it. It's just the different spread and what you would make across the board. Now, guys, let's go to the personal recruiter bonus. Everybody that you personally recruit, all right, level 1 and level 2, no matter what, above and beyond all the stuff we've talked about, there's a 2% and a 1% override. So even, you're always making 1% or 2% of their sales, and that might not seem like a lot, but it can be quite a bit, right, especially over time. So we do pay attention to that. That happens forever. Executive management overrides. Now, let's say you work so hard. You become executive director, and it took you a while to get there. Well, let's say you hire on some loan officer or some insurance guy or gal that's just driven, and they see this, and they go boom, 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 boom. All of a sudden, they're an executive director like 3 weeks after you get it. And you're like, oh, well, I really wanted to make overrides on you, but that sucks. Right? The company paid attention to that as well. And basically, on anybody in their team that's underneath them on their team, you make a 6.9% override on their sales. And that's like $150 per if it's a $3,100 deal. Okay? Let me be very clear. Folks, most of my clients pay for the program in full if they can. The client that's purchasing on Friday, guess what? They have a credit card that they can use. They're going to put on the credit card, and they're going to make like a $50 payment or whatever it is, okay, for a while until it's paid off. They have it. They own it immediately, and the agent gets paid the full commission. We have things where sometimes people can't do that. They don't have a credit card. They don't have cash. They don't have the other options, and they have to do some financing. Well, they have to put at least $495 down, and they can finance the rest. But guys, remember, if they do that, then your commissions are a lot less, and you're going to get paid a little bit over time to make that up. So just understand that. This is if it's a paid in full deal that these numbers we're talking about, all right? Now, here we go. Bonus pools. This is the coolest thing that there is, really. And this is where the real money comes in if you become an agent. Can you imagine if you worked for Prudential Real Estate and you do really well, you sell a lot of homes, and you make a really good living. And let's say you open your own deal, and you have a bunch of agents underneath you, and you're overriding some of that stuff. That's great. But what if Prudential came to you and said, hey, you know what we're going to do? Out of every home that is sold through Prudential across the entire country, tens of thousands of agents, guess what we're going to do? We're going to set part of each sale aside and put it into a bonus pool. And then there's going to be different bonus pools, and for different levels of production above and beyond what you normally make anyway on your sales. you're going to be able to share in that pool. Whoever hits certain benchmarks will share in that particular bonus pool. That is really exciting, okay? Look at these. There's personal producer. There's executive director. See, these are the different pools. This one right here, we may have 2 people now, I think, maybe a couple, maybe 2 or 3, but there's just one for sure that I know of, and she refers all her people to me. I work with her very closely every week. We talk a number of times every week. Guess what? She became partner. There's a partner bonus pool that's phenomenal. Guys, that's your ultimate goal to hit. It took her a lot of work, a lot of time, a lot of dedication, a lot of one-on-one with a lot of people to build this up. But it's doable, and it's already happened. All right? Now, ongoing trips and incentives, these are things that I say we, I mean the owners of the company. I'm not throwing these trips around, you know. I'd be taking them for myself and heading to Bora Bora. No, but look, basically, we try to sweeten the deal, and there's something that's phenomenal. Let me talk about this. This is what's called direct to director. Guys, I've been with this company 9 years. Actually, more than that now, 10 years. And you know what? To me, this is the best promotion that I've seen. And I hope it just stays a staple part of what we do. It doesn't go away, because I think this is huge. In your first 30 days of becoming an agent, if you make a sale, and now it has to be a platinum or a platinum plus, and what that means is at least $80,000 of debt, or at least having a mortgage involved. A platinum plus is 3+ mortgages, okay, or 4+ mortgages. All right? If you sell one of these in the first 30 days, and look, you can refer that to me or my team, and if we can help close that deal and you get paid, guess what? It immediately bumps you to a director. You would have had to do $12,000 of sales volume to get there. All right? That's awesome. Okay? And basically what this shows you is down here, if you're looking at per sale, what you would make as an agent, you would make $496. As a supervisor, you make $605. No. Because you made a sale, all your subsequent deals are going to be at $714 instead of $496. How great is that? And it happens immediately if you can get a deal in the first 30 days. All right? Now, remember, there's spread as well. Right? So you're making a higher spread on everybody underneath you immediately because you did that. All right? Now, this is pretty cool. Do you see where it says you're skipping or you're going from agent, you're skipping supervisor, and you're hitting director? Well, guess what? One activation, or let me explain something else. If you purchase your own program, that also gets you there in the first 30 days. So if you're an agent and you decide to purchase your own program, that will qualify you for director as well. That is phenomenal. That's exciting. That's what we love, because you're not, I'm just telling you right now, guys, you won't have as much success with selling this program if you're not using the program and owning it and living it, because you're telling people why you love it. That's the testimonial. I've had clients that were nervous or they weren't sure, money was tight. You know what took them over the edge? Sometimes I have something to do with it, but usually it's them saying, you know what? Our friend Jennifer and her husband Steve that refer us, they are so sold on this. They love it. They said it's done wonders for them. Some of our clients have paid off their debts. Jackie Washington is one of our agents, and there are other agents listening, I'm sure, on this call that have also done it. But Jackie paid off her debt and her mortgage in 5 years roughly. All the people that wouldn't listen to her 5 years ago, they're sure listening now, because she can show them the letter from the bank saying, thanks for paying off your mortgage. You're done. It's yours. All right? Now, here we get into Worth Rewards, and we're going to be wrapping up the call in a few minutes. I'm really surprised I was able to catch up and get done in time. Now, Worth Rewards, and guys, I don't have every little detail on this, but the idea is above and beyond all the money we already talked about, above and beyond the rewards that you make, the commissions, the overrides, all these things. We have something where you can either, with every sell you do and all the stuff that you're hitting, if you hit certain levels, what we do is we give out a little debit card, if you will, that's replenishable, all right? And you can either cash that out each month and buy something, or you can save it up and eventually get something huge, right? And it's pretty exciting. When we say new car program, look, we've had agents win cars before. Colby Dally, years ago was he owned a mortgage company, and he was sitting on top of his brand new red Ford Mustang back in the day. Okay, I've seen it happen. Vacation, whatever it is, you decide. But let's take a look at this. There's a silver, gold, and a platinum level. Now, what this means, let's just take a look at this. If you do $4,000 personal paid volume, okay, and you recruit 2 new people, okay, well, first of all, you're going to get paid your commissions on these deals, right? And if these guys produce, you'll make overrides. But just because you did $4,000 in personal paid volume and you got 2 new recruits, you make an additional $400 that month. Isn't that awesome? If you do this, you're the gold, you get paid $600. If you get $8,000, you get $800. And all of those are including getting 2 new personal recruits. What you want to do is make this just a staple part of what you do. At the very least, you do this. You talk to enough people to make sure this always happens. You will also be part of the personal producer pools every month, and you'll make that extra money and get those extra checks in. Guys, that is exciting. This is on top of everything you're already earning. And like we said, you get a card, and when the sales go through, our whole commission system that we have all built up will go do, boom, and it fills up your card with X amount of money. That's exciting. That's awesome. So what is it going to do to get somebody to become an agent, right? Have you guys ever watched like Kitchen Nightmares with Gordon Ramsay? You know, small business owners. It happens to be in the restaurant business. But when he goes in there and he sits down with them and they're kind of in trouble, what does he say? He goes, how much did you buy this place for? And they're like $490,000. Well, how much are you into it now? $700,000. How much are you losing every week? $9,000 a week, right? They're panicking. They're working hard. Small business owners sometimes have to invest a lot of money to start their own business. And they have to work their behind off and take loans out and do all these things until they're finally in the black. And then they have to manage it the right way. And there's so much to attend to. I need you to understand, we handle all the financing side of things, or the finances side of things. We handle building your website, building your sales tools. We provide the closers even for the deals and the presenters and the coaches and the IT and all of that. You basically pay $149 to become an agent. That's not very much money, okay? We give you 2 personal websites, the worth analysis software, the back office, a demo you can use, okay? All the benefits of owning a business. I'm talking about write-offs. Right? Now, I need to be careful with this, but look, if you show your program, I'm not going to get into that. We'll talk about that separately, but just understand there's some really serious write-offs that you can do if you've never worked for yourself before. That's a big, big deal, all right? But here's what I'm going to up the ante a little bit because, guys, $149, that most of you should be able to come up with that. That's not that big of a deal. But getting your own program is a huge thing, okay? Whether you have a lot of debt or a little bit of debt, you should have the program and own it. So why? So you can tell everybody you talk to that you have it and you own it, that you have a real story to tell. And if your total investment in your own business is $3,500 or less, it may be less than that, but 35 plus 149, $3,649, if that's your total investment in your business, and we're paying you the kind of referral fees that we pay, that you're going to get that back in a relatively short amount of time, guys, and be in the black as a business owner, and that's exciting, okay? So for anybody that's on this call who's new, who haven't heard about this, or this is the first time that you've kind of heard about it, look, all of these things we talked about on the agent side are fantastic. I would sign up as an agent right away. It's not that much money, and you're going to talk about this to some people for sure. But set up a time, talk to the person that referred you and say, look, my wife and I, or my husband and I, or if you're single, whatever, I'd like to set up a time to run my numbers. What do I need? Write this down if you're thinking about doing that, okay? And set it up for next week or later this week if we have time available. You need your most recent statements for your creditors, so your mortgage, your car, your student loans, your credit cards, etc., okay? We typically are asking for interest rate, payment, balance, the date you started paying on it. So, we started this on, let me look it up. We started paying in August of 2012. Okay, I need that number. On a mortgage, we need how much of your payment goes to escrow. Do you pay mortgage insurance as part of that, so PMI? Okay. I don't need all your bills. I don't need your gas and electricity. I need you to figure out, okay, here's how much money we make. Here's how much money we spend every month on everything. Here's how much is left. I need to know what's left. What's your discretionary income? And be conservative with it, but what's your discretionary? All right? That's the information we gather. We don't gather anything else. You know, it's not a big deal. We're looking forward to working with you. We're looking forward to helping you. This has changed so many families' lives. I don't want to sound cheesy, guys. I love what I do. I love what I do. I've been doing this for so many years. And I've had opportunities to be involved in starting some other companies and do some different things. And I love what I do. And I've stayed the course. And I'll tell you what, it's exciting when I hear a family, when I hear the light bulb go on, and they went from thinking they had all the answers. I'm going to give you an example real quick as we're wrapping up here. I'm just picking this one out of the blue. I had a family a number of years ago that I talked to that said, "Oh yeah, we don't, I don't think we're even really interested. Here's our thing. We're retired. We have a good retirement coming in. We're 60 years old, 62, or some maybe 65." They go, "We refinanced and we paid off all of our consumer debt. So now we have all we have is the mortgage. So we don't even have any debt. We just have the mortgage, and it's at a low interest rate, 3.5 or 3.65." And I said, "Okay, so you have the worst debt." And I go, "Wait, what? It's 3.6. That's not the." I said, "You're paying 66% interest on your payment right now." And they looked at me quizzically. I showed them the math of it all, and they went, "Oh my gosh." I said, "And you have a 30-year term, and you're 60. And I know you don't think you need this, but let's take a look at this." And we ran their numbers. If they decided to focus on the debt and do it our way, guess what? They took 30 years, or it was probably 29 and a half years, down to 5.9 years. And guess what else they did? The husband said, "Hey, I want you to rerun our numbers, but this time add this much money per month." I said, "Okay." And it took them down to 2 years. And he turned to his wife over the phone. I could hear him, and he said, "Honey, I'm coming out of retirement, and we're going to be out of debt in 2 years." Now, after that debt's paid off, guess what? Now all of their paycheck, they don't have a $1,500 or $2,000 a month mortgage payment going to the mortgage. It's freed up. It's theirs, and it gets to bolster their retirement, or they can take it and go on some vacation. Bottom line is that was a life changer, and they didn't even think they needed help. This is not necessarily for just people that are buried in debt and don't know what to do. In fact, those people sometimes don't buy the program because they're so buried they can't even see straight. They don't even know what to do. They're too scared to move forward. Okay? We need people that want to make some changes. So I'm going to wrap up. Thank you so much, you guys, for being a part of this tonight, and for participating, for listening, for bringing people on. Please talk to the person that brought you in, and we will be more than happy to help you in any possible way we can. Have a wonderful night, and we'll talk to you soon. Bye-bye.